Hey everybody, hope everyone is doing well and had a good day today. In this video, I will review the Emini 5-minute chart for Tuesday, August 26th, 2025. Really quickly on the daily chart, the market looks like it's evolving into a trading range. We had this sell-off down to test this major higher low. Then we had this three or four pushes to a new high, sellers at a new high, deep pullback here, maybe 50% pullback of the rally. So it doesn't appear that we're in a strong bull trend anymore. 50% pullback, pretty significant trend line break of this rally, but we're probably going to test the highs. We tested it here, and then got a small inside bar on the next day. Now this is a bad stop order signal bar. Inside bars are trading range bars. Usually, with a trading range, you want to buy low and sell high. So selling at the low of a trading range is not ideal. But also after this big bull bar, this did a lot of damage to the sell-off. And if we think about the sell-off compared to the pullback, the depth of the pullback is probably about 90%. So a significant trend line break by the bulls. Then a small signal bar for selling, probably buyers below, and probably buyers in the buy zone of the bull bar. So the midpoint of the bar, which is just below the low of yesterday. So probably support at yesterday's low, but also probably resistance at yesterday's high. I'll just put in yesterday's low in blue. And put in the high as well. Going into the day, we had this bear channel. It's a tight bear channel, so fairly strong bear trend. Very little buying pressure and open gaps along the way. But then we had this sell vacuum on 78, and that's a problem for the bear trend. Sell vacuums like this, it's unsustainable. It's breaking below a channel line. And the bears who are selling are probably going to look to take profits on 78. And when you get a sell vacuum with bad follow through, the market may be evolving into a trading range. Then we had a gap down going into the day. You can think about the gap as simply a bear breakout from the close of yesterday to the open of today. So sell climax, bad follow through, sell climax, bad follow through. Couple bars with overlap on the open. Bar 3, it's two pushes sideways to up in a bear trend environment, although we may be evolving into a trading range. But bar 3, it's a bull breakout bar, closing above the high of the prior bar, but the context for buying is not all that good. Tight trading range on the open, micro double top 1 and 3, and a couple of sell climaxes. We probably need at least one more push down. This bear breakout did get a second leg, but the second leg, in the form of a gap, may need a second leg as well. Bar 2 may not have been enough. And we know that bar 1 usually does not remain the low of the day. So we probably have to test below bar 1 as well, which we did on 4. So 3, it's basically a low 2 short. A couple of legs sideways to up, 1, pull back, 2. Traders will sell the close of 3. One thing you can do, you sell the close of 3, put a stop and measure move up, and target the low of 3 or the low of 1. For another sell climax, now we have 3 legs down, 3 consecutive sell climaxes. The market is transitioning into a trading range. So 4, it's a big bear breakout bar, but it's more of a buy the close bar, if anything, because it's 3 legs down in what's probably becoming the bottom of a trading range. Some traders will wait for bad follow through. They want to see disappointment for the bears on bar 5 rather than buying the close of 4. But if you had to choose one option, would you rather sell the close. Let me fix that. Would you rather sell the close for, put a target down here, a stop up here, or would you rather buy the close for, put a stop down here and a target up here? Because it's 3 legs down, and you expect the channel to evolve into a trading range and test the highs, it's probably better to look to buy. But it's a little aggressive to buy 4. But buy the close traders, it's a good trade. And 5 instantly reversed bar 4. So lots of trading range price action on the open today. 5, 3 legs down, bull breakout. Strong enough bar, probably buyers below, buyers in the buy zone of the bar, and we're probably going to get a second leg up. 6 is a bad sell, probably buyers below. Now we have a 4 bar micro channel, probably buyers below 7, second leg up likely. So a weak sell, buyers below 7, buyers below 8. Outside up 9, bulls may be getting their second leg. Still a bad sell on bar 9, but now we're testing near resistance. So we have a few pushes up, 1, pause, 2, pause, 3, outside up on 9, testing the moving average, and getting close to the resistance from yesterday. So the upside here might be limited, sellers above 9. But a weak sell signal on 10, signal bar is the doji, and it's relatively small, and the channel up is fairly tight, so there might be more buyers below 10. And then 11, a bull breakout bar, but it's similar to 3 and 4. So we have 2 legs up, 1 pullback, 2, but you can count several pushes, 1, 2, 3, 4 pushes up, bull breakout bar, but late leg breaking above a bull channel and testing resistance. So 11 again, like 4 and 3. Probably better to sell the close rather than buy the close. So you sell the close, put a stop, a measure move up, and a target at the low of the bar. 12, disappointing follow through for the bulls. If you bought, you're disappointed by 12. If you're buying 11, you really need momentum because you may be buying at the top of a trading range. And if you are, you need momentum. You cannot buy at the top of a trading range unless there's momentum. And 12 is not momentum for the bulls. So probably sell the close, sell at the high close of 11 after bar 12. And you can see 13 tested the close of 11 and then reversed down. 13 is a bear breakout, so reversal and follow through probably will get a second leg down. The problem for the bears is that the channel up is tight. So this entire rally from bar 4 to bar 11 is probably going to get a second leg, which means this reversal is probably minor, but this is enough selling by the bears that there are probably sellers above and a second leg down is likely. And then a 3 bar micro channel, 12, 13, 14, probably sellers above, second leg down, likely, bad buy signal. 15, a good looking bull bar, but forcing you to buy right below the moving average on a flat moving average in a tight trading range. It's probably sellers above. Again, the second leg, the micro channel will probably get a second leg down. So probably sellers above 15, even though it's a good looking bull bar. 16 may have been the second leg for the bears. We did the minimum, we pulled back and tested the low close. And like I said, the rally is tight enough that this reversal is probably minor, and the bulls will likely get a second leg and test the highs. But it looks like we're entering a tight trading range here. Inside bar 17, probably sellers above and buyers below. Limit order market. And the tight trading range continuing, we're getting several legs down. 21, a reasonable stop order buy. If you're short, it's okay to exit above 21 and probably fine to buy above 21, looking for a second leg up. But as far as putting a stop below 21, it's not ideal because we can still get a third leg down below 21. But the reality is that if we get below 21, there are probably buyers below. 24, another attempt down. It's a bear breakout, but it's a late leg. in a trading range. So 24, again, one of those bars that if you had to choose between selling the close 24, putting a stop at the high of the bar, and a target at the measured move down, or you buy the close 24, put a stop, a measured move down, and a target at the high of the bar, it's probably better to buy because it's a trading range context. In a trading range, we're going to count legs. We have 1, 2, 3 legs down. We're testing support. The market has bounced several times at yesterday's low. So 24, more of a buy the close bar, at least for a scalp. And same with 25. It's a small follow-through bar, but it has not broken out below all the bars to the left. The reversal up. 26, another reasonable stop order buy, similar to 21. If you're short, you exit above 26, and traders can buy the close 26, expecting a second leg up via rally to the highs. You're expecting this rally to get a second leg up. This could be a wedge bull flag, but a bull trend bar forcing you to buy right below the moving average. So maybe better to buy in the buy zone of the bar, the midpoint, the purple one, which is what 28 tested. So again, 28, more of a buy the close bar here. It's a late leg for the bears, leg 4 after a bull breakout that will probably get a second leg. It's good context for buying here. And then a good bull bar outside up, 29 for the bulls, 2 legs up, but not clearly at the high of the range. The high of the range could be up here. So this is one of those second legs where it's very context dependent. This is a second reversal, 29, reasonable to buy. 30, a weak sell, probably buy the close, buy below. And same with 31, a weak sell, so reasonable limit order buy below or buy the close. Now we have got 3 or 4 pushes up to resistance, so probably sellers above 33. Upside here might be limited. Big reversal bar, 35, but tight channel. The reversal will probably be minor, but 35 is likely to get a second leg down. So 36, a high one, but probably sellers above. Bears trying to get their second leg, tight trading range at resistance. But now we're probably at the high of a trading range or a channel. So resistance area, not ideal for buying. Bulls will buy a pullback instead. Second leg down, 40, but the downside is probably limited. This tight channel should get a second leg up. So probably buyers below 40, maybe at the moving average, which is where we found support and bounce. So a high 2, 42, reasonable stop order buy for a test of the highs. Another attempt down, but now it's 3 legs sideways to down. So another bar that is probably better to buy the close than sell the close. It's forcing you to sell if you're selling right above the moving average. And the structure, the context here, this is probably a minor reversal. Look at it's a sideways trend line break of the bull trend line, but the pullback depth is not all that deep. From the pivot point, the low of the bull move to the high, to the deepest part of the pullback is only 40%, so not even 50%. Still okay to buy here for a test of the highs. And 45 pulled back deeper, but reversed up, and we'll probably get another leg up after this rally. This could be another wedge bull flag. So not a very good sell, 46. Reasonable stop order buy, 47, and then 48 reached that target. So upside here might be limited. The market looks like the market's in a channel. We're getting to a new high, and this is where bulls will take profits and bears will sell. So not ideal for buying up here. And you can see the reaction. Now 49 will probably get a second leg down. And follow through. So 3 bar micro channel, sellers above 51, likely, second leg down, likely. 4-bar micro channel, bad stop order buy 52, sellers above, second leg down likely, and then give up bar 53. The problem with 53 for selling is now you're back at support. So if you look to the left, look at the close of 28. In this area, traders got trapped by the rally, and because of that, this becomes support. Any bear who sold back here, obviously they got trapped into a losing position. If they're trading with a very wide stop and they scaled in, maybe a bear sells here, sells more at the new high, the market comes back to their original entry. They're probably going to take profits at their original entry after seeing what happened if they sold. Plus, it's a nested 3 legs down. There are a few ways to draw it. There's 2 ways, plus it's a bear breakout, pause, bear breakout, inside bar, pause, and then a third breakout. So 3 legs down, at least 3 different ways to support. So another one of those trend bars that might be better to buy the close, stop and measure move down, and target the high of the bar. But it's a little aggressive. It's maybe a 5-bar micro channel. So maybe you wait for the reversal. 54, strong bull reversal at support, second leg up likely. But after all the selling, there's probably going to be an attempt at a small second leg at a minimum. So similar to 26, might be better to buy in the buy zone of the bar, but there's an option to buy the close and scale in. In this case, it never pulled back to the buy zone of the bar, so this follow through traps traders. The traders who want to buy the pullback don't get the chance. Now we got a 3-bar micro channel, which probably buy the close here. The odds are we're going higher. Second leg up, likely. Target the highs. Buy the close, buy below, buy the close, buy below. First bear bar in 6 bars, buy the close. And then target reached, and you can see the reaction. Limited upside, sellers above. The channel up is very tight. This may need a second leg up as well. It's a big 3 legs up, 1, 2, or 2, and 3, but very little selling pressure along the way, so not really ideal to be looking to sell up here, unless you're taking profits on longs. But as far as selling to go short, I would not. There's not enough selling pressure. Bad sell 63, buyers below for at least a scalp, but sellers at a new high. So again, we're at the bull channel line and there's resistance here, but the selling pressure is weak. There's really nothing, there's no reasonable stop order sell here, and because of that, swing trading bulls will hold on to their positions until there's a reasonable signal against their position. We don't have that. So 71, a give up bar by the bears. It's a gift, probably profit taking bar for the bulls. We're breaking above a channel line, which in general has a low probability of getting follow through. Usually the market reverses within 5 bars and then comes back and tests the trend line. But like I said, very little selling pressure along the way here. So all of this might be a breakout that needs a second leg. So as far as selling here, I would not. Weak reversal attempt, 73, probably buyers below. First, decent bear trend bar in many bars. After such a tight channel, probably buyers on the close and buyers below, but 74 probably needs a second leg down. So follow through selling to the moving average, but now we're testing the low of 71, which should be support. So layers of support here. 75 more of a buy the close bar, but you need to use a wide stop. Or you can wait for the breakout, the reversal back up. So 76, reasonable to buy and buy a pullback. And then there's another leg up, so profit taking at the highs. At this point, we're getting late in the day, so not really ideal for trading here. 77, another big bar like 71 that is good for profit taking, but not really great for selling the close. And today we actually went outside up. So the blue lines are yesterday's low and yesterday's high. On the open, we fell below yesterday's low. And at the end of the day, we got above yesterday's high and closed there. We actually closed a decently strong bull trend bar, opening near the low and closing just about on the high. All right, that's going to do it for today's review. Thanks everybody for watching, and I hope everybody has a good night.